Vitale American Retirement Advisors with the Gradient Investments weekly market update for the week ending October 20th. Let's get into stocks. Global markets declined last week after fears of continued inflationary pressure were reignited by U.S. industrial production and retail sales reports. And we're going to get into that a little bit more. So you're going to see that the market's very volatile right now. So what happened last week? The benchmark 500, S&P 500 was down 2.38%. The Russell 2000 was down 2.25%, and then Nasdaq lost 3.16%. We are seeing earnings this week come in, so it's actually rebounding a little bit. We'll talk about that more next week. Overseas last week, the international developed markets, which is the EFA, was down 2.59%, while the emerging markets was down 2.69%. Now within the U.S., the best performing sectors were consumer staples and energy, while real estate and consumer discretionary were the laggards. By style, this week value did better than growth. It goes back and forth. So everybody says, what's growth, what's income, what's value, what's growth, there's so many different subsectors, so it's just hard to understand where we're at. Let's talk about fixed income. Interest rates rose and bond values fell last week, with the benchmark 10-year Treasury yield rising 30 basis points to 4.93%. It actually got over 5% this week, but it come down again. Investors view stronger than anticipated economic growth to result in higher interest rates into 2024 versus previous expectations of rate cuts next year by the Fed. So we'll see where that goes. I think we're still going to see maybe a little hike, but next year they should start coming down. We'll see how that works. Talk about oil prices. Oil prices gained 2% last week as fears that a wider war in the Middle East could disrupt supplies of oil, since Iran and Saudi Arabia are major global producers. The price of West Texas crude oil ended the week at $88.08 per barrel. Meanwhile, the average price of gasoline at the pump in the U.S. dropped a nickel to $3.55 per gallon, as refiners switch from summer to winter blends, which contain lower price additives and due to fewer miles being driven. Now, over the past month, the average price has dropped 30 cents per gallon. That's good news. Hopefully it would be nice to see that come down a little bit more yet. Let's talk about economic data. Industrial production rose 0.3% in September, ahead of the consensus estimate of no change, following a flat report for August. Now, last month's increase is due to a rise in production in manufacturing, which follows a slight decline in August. We're going to see how that goes as we follow it. Let's talk about retail sales. Rose 0.7% in September, more than double the consensus estimate for a 0.3% gain. So it's better. That was a good thing. This is a slight acceleration from the monthly growth rate in August. Interestingly, sales of electronics and appliances along with clothing declined 0.8% last month versus the prior month. So they look at that. Now, sometimes it's good for the market, sometimes it's not. It should be good, right? But then they think, oh my gosh, the Fed's going to raise rates again, so it's bad. Let's talk about company news. Abbott Laboratories, which is a core select ANG 50 holding, reported sales and earnings that were ahead of expectations, driven by the sales of their diabetes management system, Freestyle Libre. Shares rose 6.5% for the week, and shares of Dexcom Inc., which is a core select ANG 33 holding, performed well after the outlook for its diabetes management products, as well as Abbott had been pressured by the success of diabetes management drugs in the recent months. And DXCM rose 12.84% last week. So that's good news for the portfolios, right? How about ExxonMobil? That's another G50 holding, and it's also in our energy sector holding. Announced that it will acquire Pioneer Natural Resources, which is another energy sector focused holding, in an all-stock transaction valued at $60 billion. Now, this is the biggest deal ExxonMobil has done since Exxon bought Mobil back in 1999, and is expected to close in the first half of 2024. As a result, ExxonMobil is up 4.31% since the announcement, while Pioneer is up 4.2%. So both good. How about Netflix? Core Select NG33 holding beat quarterly earnings and revenue expectations and surprised on a new subscription addition. You know how they were changing it so not everybody could steal passwords, right? The entertainment streaming firm added 8.8 million versus expectations of 4 million, and shares rose 12.73% for the week. That concludes this week market summary. Thank you so much for being part of our ARA family. We know the market's very volatile right now. We're seeing a lot of downturn. We're seeing, we're having a really strong first half of the year. We were so excited about that. Then it pulled back a little bit the last month or so. But we know we got to stay the course, and we know that we've got safe money for this very, very reason. So Reach out to us if you have any questions, 855-756-5700, ARAadvisorsinc.com. And God bless you. We look forward to seeing you again next week.